Is it time to sound the alarm? An inflation tsunami could be heading our way. Today, we find out the consumer price index shot up 0.4% in January, almost 4% annually for the last 3 months. This, of course, comes on top of yesterday's huge move higher in producer prices. Now, I've told you before, all this could squeeze corporate profits, and it could be a tax on businesses and consumers. So let's talk about this whole story. Here now we have Bryan Wesbury, chief economist at First Trust Advisors, Lee Munson, chief investment officer at Portfolio Asset Management. Bryan, this is the story that no one wants to cover. And just for the latest readings in the past week or so, we've gone from the ISM reports in manufacturing and services, huge prices paid. Philadelphia Fed today, huge prices paid component. Import prices up big. Producer prices up big. And a pop in the consumer price index, Bryan Wesbury. Why is it no one wants to really deal with this?
Well, you know, it's all you always say, don't fight the Fed in the market, and I totally agree with that. And that's what happens with economists. They don't want to fight the Fed. If Ben Bernanke says there's no inflation, there's lots of economists that have a hard time getting on the wrong side of him. I guess I'm not one of those. We never had deflation. Don Luskin was just on here talking about deflation. This country did not have any deflation in the last few years. What we had was a panic. Now the Federal Reserve is even easier than it was. Inflation is down because demand fell like crazy in the panic. But now that things are getting back to normal, inflation is picking up. It's going to be much worse than people think in the years ahead. My forecast for the CPI this year is up 3.5%. 4.5% next year, and 5.5% the year after that. So we're going to have inflation, not hyperinflation, but pretty serious inflation in the next couple of years.
Lee Munson, hard-bitten, tough-minded investor that you are you really going to buy into the Bernanke theory or scenario that there is no real inflation? The Bernanke from Facebook fame, from YouTube fame. Do you really buy into that?
Well, I don't know if the Bernanke really knows quite what he's doing, but, you know, he's a smart guy, and he never calls me for my opinion. I have to go through the anatomy of the trade, and I can't rely on economists, good or bad, or, you know, economic classes in the halls of finance universities. I think of one thing. We have big inflation in emerging economies. Larry, what people don't want to talk about, and Bryan, I wish he would talk about it more, is we have a two-geared economy. Emerging markets have high inflation. Domestic economies don't. I mean, please, 3%, 3.5%. Hey, great if it gets there. I don't think we'll see past 3%, and I don't care about 3% CPI inflation.
Why not? Why not? Well, why is it great if it gets there?
Because it's a normal. Because if 3% inflation, to me, that's not real inflation. That is just a normal part of the American economy because we're growing. Listen, we've got housing with an 8-month official and 16-month when you take in foreclosures backlog. We've got unemployment, 9%-ish official, 16% everybody agrees with people who take themselves out of the workforce. So when you look at those type of headwinds, okay, it's a tale of two cities. I don't care about going to the gas station and having to use Chinese, Indian, or Brazilian currency to buy my gas. I buy them in U.S. dollars. We don't have a lot of growth. And corporations, they need that high productivity. And why hire people when you can buy tech?
Bryan Wesbury, gas prices are going up. Coffee prices are going up.
Yes.
Prices paid for manufacturers are going up. In other words, you see all these signals. In some sense, I don't really care about the CPI. It's like, who do you believe? Do you believe what they say, or do you believe your own eyes when you see these prices?
What's interesting about what Lee just said is, remember, all of those emerging market economies that you're talking about with all this inflation, they used to have 3% inflation. And I've never seen a high inflation environment that didn't start out with low inflation. So just because we have 3% inflation here doesn't mean we're not going to have more inflation in the future. You're absolutely right, Larry. Producer prices, the pipeline is filled with massive price increases. And one of the key reasons that we haven't seen this translate into consumer price inflation here is because we produce high value added things. Lots of these other countries produce low value added. You know, you stick some commodities in there, add a few paints and colors, and you got a T-shirt. And we produce high value added stuff. So when productivity goes up, we can kind of hold that inflation back. But that can't last forever. We will eventually have much higher inflation here.
Lee Munson.
That's just, go ahead.
No, I was just going to ask a simple question. In the history of the earth, has a central banker, especially ours, ever said, oops, we were wrong, inflation's coming? In the history of the earth,
30
Lee
years
Munson,
later, when they're dead.
I ask you, even 30 years later, they won't admit it. They didn't admit the 1970s inflation until late 90s, for heaven's sakes. So, Lee, it's the Bernanke thing. Is Bernanke not reading the newspapers about, for example, huge increase in prices paid for the Philadelphia factory report?
Okay, listen, this is something I'm going to give Larry and Bryan. Okay, this is a gimme. I agree with you guys that the Bernanke is distant using the CPI from the American people in terms of using food and fuel. Listen, food and fuel is everything. But I still think you have to go and look at Eurozone and U.S. tepid growth. There's not that much growth. 2 or 3% inflation is not going to make a big deal. And it's all about emerging market inflation, not about U.S. inflation.
The only thing I would say about that, Lee, is in the early 1980s, we had 10% inflation and 10% unemployment.
I must get out, Bryan Wesbury.
We don't have the growth emerging markets have.
Thank you very much. Lee Munson, thank you very much. Bernanke, thank you very much.